And this time we're talking about the new and revised auditor reporting standards. So we've seen that was the second part of our discussion today. And Brad, I don't know if you're able to put the slides up again, just as we work through the questions, but while you're doing that, maybe I'll just jump immediately into question one so that we don't waste time. And the question one is really, is the information that's being provided to you in the new auditor's report useful, and in what way? And has the new auditor's report increased your confidence in the quality of the audit performed? So multi-part question there, but interested in your views on question one.
From my perspective, I think I'm not sure the auditor's report itself indicates a huge amount in terms of the quality of the audit performed. It is useful, and it does provide me with confidence around the financial statements, therefore the company and its management. And that's especially so if the qualification is unqualified and there is no emphasis of matters, and the key audit matters are the ones that I would expect to see in relation to the organisation. So the opposite would happen in terms of confidence. So if there is an audit qualification or an emphasis of matter, or there's a key audit matter that I think should be there and isn't there, so it's missing, that would reduce confidence in the financial statements and the company and the management. But I'm not sure it would reflect on how I'd feel about an audit. I would expect to get quality of audit information from elsewhere, like the audit committee report, maybe transparency reports of audit firms, if those are produced like they are in the UK, or sort of regulators' public reports on audit, but I wouldn't get it from the actual audit report.
Other thoughts on question one?
It's Jim, Julie.
Okay.
Given the hours and hours and hours that the board spent on redesigning the auditor's report, I think it's had relatively little public impact. I think the profession probably feels it's a better report. I think perhaps the fact that the opinion comes in the first paragraph is helpful to everybody. But I think that the bulk of the rest of the wording and the descriptions of responsibilities absolutely flies over the heads of the general reader. I do think that the CAM section is proving to be incredibly useful, and we'll come back to that later. So I think that the amount of effort that the board took trying to describe management's responsibilities and and the auditor's responsibilities are fine from the litigious point of view of trying to set out each person's or each group's relative responsibilities, but for the general reader, not important. Let's go back, they say, to the one paragraph report we used to have in 1965. The statements are correct, or whatever the current day equivalent would be. But I think the CAM is useful, and we'll talk about that later.
Yeah, we'll get to that in question two. And thank you. And Yuri, I saw your hand up.
Yeah, maybe just one observation from a U.S. perspective when we think about critical audit matters under the PCAOB standards, and acknowledging there are some differences, but obviously they are kind of determined on a substantially similar framework. Through our observation and interaction with the U.S. profession, I think we did note that, the underlying changes to the PCAOB auditor reporting standard did not necessarily result in changes to the nature, timing, and extent of the audit procedures that were being performed, solely because a matter was identified as a CAM. And so, CAMs provide obviously a level of transparency that allows the users to understand more about the areas of the audit, and greater risk, and how the auditors develop their testing to those areas.
Other thoughts on question one? We've touched a little bit on question two, which I'm happy to go to next if there's, James, yes.
Thanks, Julie. The point Jim raised, I think, is a very interesting one, because I do think they have added value to audit reports, and that's generally the conversations I've had with people who use audit reports. Yes, they could go further, but the question I would like to raise from what Jim said is, I don't think we'll ever have the general public being able to understand audit on an audit report. So when I talk about who these reports are aimed at, and I know it says the shareholders, I think we have to think of informed investors as the real target audience. And that is where it has to be assessed, because otherwise we have no chance of ever bridging this knowledge gap. So only if we really place focus on who we believe are the real key stakeholders and should have sufficient knowledge to be able to understand what we're saying, can we really target and mitigate these comments which are made constantly about the knowledge gap and we are not meeting expectations.
Okay, great. I'm going to move us to question 2. On question 2, we've heard a couple of views on CAMs, but your views on how useful you found the information in the CAM reporting, and then secondly, what might be done to improve the usefulness if you think that there's improvements still to be made. Thoughts on CAMs?
So it's Jim again. My current role is the Audit Quality Control Consultant for Russell Bedford International. And Russell Bedford International has, 300 offices in 100 countries, but generally deals in the SME marketplace, although of course we have offices with some public listed entity clients. And my feedback from our offices is that they have found CAM very useful. First of all, because it's helped them to focus what are the key issues in the audit. It's helped them to discuss them with management. It's helped them to just discuss them with those charged with governance. And where those groups are different, and I know they should be in the ideal world, but around the world, they're not always different. But where they are different, those charged with governance have found it incredibly useful to be told by the auditor specifically what were the big issues in the audit. So I have observed from our own reports issued in our offices around the world some quite varied matters discussed in the CAM section. And while you would think that all of these discussions would have been taking place behind the scenes anyway, prior to the issue of the standard in the context of discussions with management and those charged with governance, I'm told that being able to tell them that these are going to be in the auditor's report has proved to make them all sit up and take notice and think about the issues, and in some cases consider whether there are things that management could do better or things that those charged with governance need to do. So overall, I think that the CAM has proved to be very successful. I haven't seen many CAM notes around COVID-19 yet. They're still, in many countries, still in process. So I can't tell you what they might look like around COVID, but going back a year, they've been very useful. And they should be encouraged and continued, in my view.
It's good to hear. There's been a lot of work done on them. Others' views on CAMs?
Yeah, I was going to add that Jim's experience, as he's just articulated, of CAMs is probably better than mine, because to a large extent, and it's not just mine, but it's other people who've reflected this back to me. I think a lot of CAMs tend to be boilerplate, and they just, as we discussed in the previous discussion, they tend to just list procedures and don't really actually say a lot. To me, there are exceptions. There are some good CAMs, and these tend to actually report a focus on the problem, explain how the auditor and management have dealt with the problem, including any major disagreements between auditor and management about it, and how they've actually resolved the issue, if there is one, and in the context of a clean opinion or a qualified opinion. So I think it's CAMs that don't just repeat what the audit process has actually done in relation to that CAM. It gives a bit more colour around what the auditor thinks about the issue and whether it's impacted their opinion or not. But I take it that from James's point that it's in a lot of these cases, in a lot of audit reports, there will be areas which sort of general users who are not that informed about what an audit entails will just go over their heads.
So Charles, maybe I can just probe on that a little bit, because the second part of the question was really if there was things that could be done to improve the usefulness. You've touched on the point about making sure it's not boilerplate or just a list of procedures. Is there anything specific you might share in other information that could provide more usefulness to the CAM?
Yeah, I think so. But again, I'm mindful that that this goes back to sort of the problems with an entity and or its auditors being able to contact or engage with the key shareholders, especially the more knowledgeable, informed ones, which to a large extent are probably going to be the institutional investors. But if audit committees and or auditors can actually get hold of some of these people who are willing to engage, and I think they would be in the same way that a lot of people are almost forced to be engaged on remuneration on entities because boards and remuneration committees are forced to contact investors to get feedback on remuneration. I think the same thing could happen on the audit side, and actually get some feedback on their audit reports as part of the subsequent year planning stage. And I think if they did that, and especially talk about the key audit matters that they've raised in previous years, and whether that's the information that the users of audit reports are looking for or not, and if not, what would be more useful information if they can articulate that. I think that would be a sort of a better process in terms of getting more useful information into audit reports.
Any other views on that point? Definitely difference in jurisdictions as to how long CAMs have been around, but for some jurisdictions, some time for sure. So any thoughts on what could be done to improve the information? If it's sounding like it's been helpful, but maybe there's some improvements that could be made.
Yeah, just quickly, when I said that the people I had spoken to had found them informative, one of the reasons actually sometimes there was things they were expecting to see but didn't, and they found that informative, and that again is informed investors. So I do fully take on board what Charles is saying. So I do agree one of the ways to make it better is really tailor it to the entity concerned and what really are the key audit matters, and not just describing the work done, but really trying to get to what is it that kept the auditor awake at night while they were doing that audit. And I fully agree with, if we can find a mechanism, we get shareholders more involved at the outset, that would be great. And there's also a need then to involve the audit committee chair.
So your point, James, is really getting to the question of why is the auditor telling me about this particular item, as opposed to, listing the procedures, but really, what is it about this item that rose to the level that you felt you needed to tell me about it in the auditor's report, right?
Yes, and does that then tie into the audit committee report as well? If this is of such importance, what is the tie-in here? And are there any gaps that I should be concerned about between what's reported in the audit committee report and what's in the key audit matters?
And I know one thing that's been a challenge as well is making sure that the financial statement disclosures tell the same story, because I come from a jurisdiction where we're a little bit behind in CAM reporting, but that has been an item that's been a work in progress, I'll call it, with the preparer, with management, because sometimes we want to, as auditors, we want to point to the financial statement disclosures that should tell more of the story. And we're finding that there might be a little bit of a gap there in what's previously been disclosed. So I think, if anything, that's been an improvement, I would say, in financial statement disclosures. Sue, I'm here seeing you nod. I assume you've had a similar experience.
Yeah, sorry, I think that replicates the experience we had in the UK when it was first introduced. That it actually just facilitated more in the way of discussion, and the ultimate outcome was just more transparency through the financial statements.
Jim, yes?
Can I come back? I think I'm nervous that we're rushing to consider making changes in such a new standard. That I can understand we make changes if something is wrong and is not being applied consistently or is causing confusion in the marketplace. But in many senses, this is still very early days for a major change in the reporting model. We haven't had enough, I don't think, years of experience to see how this is playing out. We haven't had enough years to see whether audit reports improve from year 1 to year 2 to year 3 in many jurisdictions. We haven't had any experience to see whether litigation develops around somebody saying, so you publicly admitted that the procedures you did to address this issue were A, B, C, and D, and why didn't you do E? I'm just nervous that we're looking to make changes unnecessarily. If, as you are rightly asking, is there something wrong? Fine, we should make changes, but we're still very early in the overall application of these standards in most jurisdictions. So I would be cautious about thinking that things need to be changed. If you can prove it's to improve them, fine, but not just to change them for the sake of change.
And that's a good. Sorry, Charles. Go ahead.
Yeah, no, I was going to say I would totally agree with that. I'm averse to changes for change's sake, and I don't think I didn't read this question as requiring any changes to auditing standards, and I agree with Jim that you have to see how this plays out over a longish period of time. But I think going back to James's and your interaction a minute ago about sort of getting to the nub of why the key audit matter is in the audit report, why the auditor thinks that they're raising it. I think that's more about, without really knowing the detail of the standard, the application of the standard and the interpretation of the standard by individual auditors, and that's where I think the improvements can happen, which is actually improving the usefulness of the information in the audit report in CAMS, and doesn't need the standard to change. It just needs the way people are reporting to possibly change, so they're not providing boilerplate lists of procedures, they're providing more informative information.
Yeah, and maybe I neglected to set sort of the context for some of these questions. Back when the auditor reporting standards were approved by the board, there was a commitment to do this post-implementation review to understand how users were viewing the new auditor's report, including CAM, and that's what we're really taking part in right now, is that post-implementation review. Certainly no project plan or anything of that sort ready for the board, but it's helpful to hear how users, management, auditors, audit committees, and the like are viewing the changes to the report. So that's what we're trying to gather here as part of this session. I'm going to move us on to going concern, and going concern question is threefold, but you'll know in the new auditor's report there's a description of management and auditors' respective responsibilities on going concern. There's the requirement for a separate section if there are circumstances when a material uncertainty exists. And we're asking for your views on if there's additional information about going concern that might be useful in enhancing transparency in the auditor's report. So I'll take all of that together. This is really the topic around transparency about going concern and the changes that were made as a result of the new standards as it relates to going concern in the auditor's report. So I'm interested in your views on that question. Denise?
Hi, I'm a technical advisor, but I thought I'd just make a brief comment from the perspective of my day job, which is the leader of global assurance standards and methodology for EY. In the current environment with the COVID crisis, unfortunately, there are many more companies that the auditors are forced to have difficult decisions with that, or discussions with them on going concern and make some difficult decisions. And these are companies that previously did not have these issues, and even their own assessments are challenging. And what's coming out of that from an auditor reporting perspective is that the enhancements that were made for that separate section and the responsibilities aren't really being seen as they weren't a change. There was always an emphasis of matter required, so the new section, it just feels like the old emphasis of matter to many people. And what the questions that are coming up are, why are you doing this separate section the way you're doing it? This is from the audit committees and so forth, because you have this new section of CAM. Wouldn't this be discussed there? Why are you forcing, or why are you prescribed to use such specific wording and not allowed to give more context to why there are these uncertainties and what the auditor has done? So those are questions that are very recently coming up with the new reporting, because it's really being stress tested right now.
So Denise, can I just ask, so is on your last point, which I found really interesting around the wording, is it a question as to the structure of the wording in the new section versus what could be maybe more fully described in a CAM if that was an option? Is that the question?
It's a bit of both. I think the prescribed wording is felt to be very cryptic, maybe, or very technical, and there's confusion around material uncertainty versus going concern basis of accounting and the going concern assumption, and that was all issues that the board tried to address in 570. But for companies or auditors that aren't used to operating, looking at this situation so closely, it is kind of cryptic to them. And then to your second part of the question, yes, looking for more context around this company's situation in the auditor's report and what the auditor has done for that. And that's where looking at the CAM section for that sort of information.
Julie.
Yes.
I have something very similar to what Denise said. As I said before, personally, I think that just more information in the auditor report, saying going concern section, would not bring transparency to cover the gap. It would be more boilerplate report. And I think that the IAASB already tried when creating the going concern section. So, and other thing, one of the frustrations is that the auditor warning comes too late. So I think that the IAASB could explore those situations where we are now close calls or something like this, how to better explore these situations in a CAM section. Because when you have materially certainty about the continuity of the entity is in the last phase of the company, or almost close to that. So, but before this, sometimes you have more have discussions. The company is struggle to find a ways to continue to go on, and maybe one thing that we could explore is through the CAM and close call situations or things like almost there. Thank you.
That's always a fine balancing act to not. I think Fiona said self-fulfilling prophecy. Not to send a huge warning signal, but to your point around maybe something that's more descriptive about the challenges the company's facing in the CAM, as opposed to at the point at which they are going to tip over from a going concern perspective.
Yes, but when you have really to have efforts in this area, not as a boilerplate to describe no situations, I think.
Julie, just to add to Valdir's and Denise's points. I think from a user perspective, the going concern section will probably be either possibly not looked at because someone will have looked at the audit opinion and got satisfied in the same way, in a similar manner to Jim's request going back to the one paragraph audit reports, because it was you either saw a sort of clean opinion which was very short, or you got a qualification which was a bit longer and understood what issues are. But if you've got a separate section on going concern, that's presumably further down the audit report. Well, in my experience, it would be, and after the key audit matters section. So presumably an emphasis of matter would have come up near the opinion paragraph as well, if there was serious concern about going concern under the requirements. But from my perspective, my answer to question 3 would be yes to A, B, and C. And in relation to C, it's really not providing a boilerplate report. It's providing, like with key audit matters, exactly why the auditor is actually saying what they're saying in relation to any material uncertainty, for example.
Okay. I'm going to move to the last question, and this is really an open-ended question. If there's additional information that should be communicated in the auditor's report to further enhance the understanding of the audit. I know that in certain jurisdictions, there's been additional requirements applied to what needs to be communicated in that report. I don't know if you have views on any specifics, or this is just an open question to ask you about additional information that you might be useful.
From a probably a very UK perspective, I've got a list of 5 things that I think users would find useful, and it'd be interesting to see if any interaction between users and audit committees and auditors eventually got these into audit reports. The first one is a summary or précis of the main audit approach, whether it's a financial controls or a substantive or a both audit approach, and why. The second one is better articulation of audit materiality and how it is used in the audit. The third one is mentioned before, any identified red flags or external signals of potential corporate failure and responses to these, especially by the auditor. How the audit has engaged with users, shareholders, and responses to key requirements from this engagement. And lastly, possibly controversially, whether the audit fee was sufficient to provide a quality audit, or if not, what the shortfall was and whether anything was not looked at in detail as planned because of the shortfall.
Okay, interesting. Some I've heard before and some are new to me. Others' views on what additional information could be communicated. I know when auditor reporting standards first rolled out, there were, I think it was in the UK, there was actually awards given to the to some of the reports that were published. So I don't know if those still happen, but there were some very interesting reports.
Julie, no, it doesn't happen. I used to be a judge on the panel for those audit report awards, but we thought they were, from an institutional investor point of view, we thought they were a good thing.
Well, there is no doubt that the question of disclosing materiality has been an item that's come and gone on board agendas for 25 years. And there are all sorts of arguments on both sides of the coin, but I subscribe to Charles's view that it's an issue that should be talked about again, because it's providing context and information that maybe it goes back to James Barber's original question as to whom are we addressing this report. At the moment, it's addressed to the world at large, and maybe in that context, the number that would be disclosed would be horrific and frightening because the size of the number would be so high but to the initiated group of investor advisors, it would be quite acceptable. So I'm not sure what the answer is, but there have been academic journals published in many countries of the world over the last 20 plus years, suggesting that disclosing materiality would be informative. And I think the board should at some point be considering again whether that's useful or not.
James, I'm seeing you nodding there. Do you have a thought on that?
No, I completely agree with what Jim said. I think it does provide a context. And I agree entirely with, the general public would never understand this, but those who really are using these reports to make their decisions, I think should. And I think it is an important concept that the board should revisit.
Charles, I think when I heard you comment on it, though, you put it in the in a way that it's not just stating the number; it's stating the number and in the context of the audit what that meant, so that there could be some context provided for the number.
Yeah, the audit reports I've seen which talk about materiality have given the materiality number, and they've given a performance materiality, which is not always explained as what that is in the context of the audit. And I think it's providing more information on how the audit, how the materiality has been used in the audit, and not necessarily just as a quantitative number, but also that materiality is a qualitative assessment as well. So there could be something that is not numerically material, but in terms of the business of the organisation, could be potentially material, and therefore material in a qualitative sense, which I think it's not clear whether audits actually cover those particular areas or not.
We are down to the final few seconds. Any final thoughts? But this has been really helpful. We'll scribe out some of our considerations that we talked about, and we're going to be back, I think, in the main room very, very soon. So I appreciate both sessions and the contributions that we've made. And yeah, we're going to be, you can leave the breakout room now. I think we've wrapped up. We've covered all the questions. Thank you.